Global semiconductor shortage roiling a wide range of industries likely won't be resolved for a few more years, according to Intel Corp's new chief executive officer, Pat Gelsinger. The company is reworking some of its factories to increase production and address the chip shortage in the auto industry. He said in an interview with CBS News it may take at least several months for the strain on supply to even begin easing, he added. For more on these stories, we're going to cross over to London, where we're joined by Ayodeji Osibino, who is with Trading Capital, Audacity Capital, rather. Ayo, thank you so much for joining us, Ayodeji. What do you make of these revised forecasts for the US and EU?
With the US and EU, with the forecasts, I believe it's been positive because Biden's stimulus plan has encouraged a lot of spending. So we do see a lot of Americans spending their money and investing their money. So spending has been on the upside of things. The coronavirus is actually slowing down, and Biden has said from July, people can go out without face masks. So people are feeling safe. So I think we're transitioning into a more safer environment in moving forward with that in terms of Biden's speeches.
Great.
And looking at the forecast as well, the pre-pandemic year-end return, Biden's 1.9 trillion stimulus plan has helped the U.S. economy a lot. In Q1, contraction wasn't as bad as feared, and vaccination programs, as I said before, have been very successful. So economists are very bullish on the US and the EU economies moving forward.
Any headwinds for those forecasts?
Yes, the only headwind I will say, and the only thing I'll say that's a major disadvantage right now is because in India, we've had new cases. And if the cases get out of hand, fear and uncertainty is going to spread to other parts of the world. And we might just go into a possible another lockdown as a precaution based on the new case rises in India, because we rely on India for a lot of things. So that will probably be a knock-on effect if cases are not controlled in India.
Thank you for that. Over to NASA. What are the implications of, I guess, NASA reaching out to the private sector, in this case, SpaceX?
NASA are reaching out to the private sector like SpaceX, Virgin Galactic. Well, as you said before, they were very successful with the mission. And I can see SpaceX, Virgin Galactic, that's Elon Musk and Richard Branson leveraging this, because as much as them fulfilling their obligations to NASA, they can leverage this on charter flights to non-NASA customers and monetize this as an opportunity to fund other projects. So it's a win-win for NASA, for SpaceX and Virgin Galactic and the industries involved and connected to space exploration.
Great stuff. On Amazon, I guess, what do you make of the appeals court's judgment, and what do you think the implication is for Amazon going forward, with them being held responsible for third-party items on their site?
Amazon has to take responsibility on this one, in the sense that they have to vet their customers very thoroughly, and safety of their customers is important as well. So I can put this down to negligence on Amazon's side, because hoverboards are very dangerous. And how are you transporting hoverboards to the customers purchasing these hoverboards? So if anything, safety and reputation is key. So I think in this case, Amazon should have vetted the suppliers providing these merchandise materials and products to consumers all over the world before we have a case like this. At least have some prototypes, have some tests. But this was not taken. So Amazon has to take the fall on this one, unfortunately, and learn from this lesson. And it's a lesson to everybody, in this sort of line of industry. But all of us trust Amazon, even during the pandemic levels. Amazon is a very big player in this field, and it's very irresponsible not vetting your suppliers to a certain level and having a case like this.
Great stuff. To the, I guess, the forecast that rich Americans are fleeing to ETFs. Are you surprised with that report on the flow of funds from mutual funds to ETFs to avoid capital gains taxes that Biden wants to raise?
To be honest with you, this has been coming for a long time. And at the end of the day, a lot of rich Americans do keep their funds and capital gains outside the US. So the ETFs are a very nice vehicle for saving tax and saving money as well. So if Biden wants to stimulate the economy by charging people in the US who earn over $1 million, 7, 8, 9 figures, it will only make sense for some of these corporations and individuals to start parking their money in tax-efficient vehicles. Some of them tend to use property overseas, but ETFs has been very attractive based on a lot of new companies moving into ETFs and a lot of new fund managers coming into play as well. So the knock-on effect, I think a lot of these companies and individuals will now be flowing into ETFs. We can see from the crypto market crash as well. All these tax hikes are pushing people to sell, take profits early before they come into place, get all the bulk of their capital, park them into ETFs, and over time they can phase out their profits without paying heavy tax gains on them. So I think this is the way forward. And what it does for their consumers and other individuals, it kind of like educates them as well on their wealth management and preserving their capital gains, because at the end of the day, nobody wants to work too hard to start paying a fraction of it on taxes. But at the same time, too, Biden's vision is to use the rich to bail out the economy and cover the pandemic losses. So it's a story of cat and mouse here. So we're always going to see, if it's not ETFs, we're going to see other asset classes where people are going to be parking their money. And at the end of the day, money is just shifting from one place to another to balance this whole situation.
Excellent. Thank you so much for that. On the Intel CEO, Pat Gelsinger, saying that the chip shortages may continue for another couple of years. What do you make of that as far as impact is concerned?
This is very, very sensitive to the economic growth and as well as a pandemic, because chip shortages are a very big thing. So it's not a thing where we can just keep quiet about it, because companies like Intel, they stand to gain a lot here, because it's a case of supply and demand. We have chips we use for our mobile phones, for our tablets. And if we look at what's going on with consumers, like during the lockdown, we know during Q4 of last year, Microsoft and Sony released new 2 game consoles, the Xbox and the PlayStation 5. But due to chip shortages, we don't have these consoles on stock. There's a big demand for these consoles that people are paying over the price for these consoles. But we can't get the supply due to chip shortages. So companies like Intel stand to make a lot because they control the chip supply. So they can name their price, and at the end of the day, we're at their mercy. So there has to be some sort of regulation or some sort of thing in place where we can have a balance, because moving forward, a chip shortage would definitely throw us back into a recession or another case worse than the pandemic.
Great stuff. Ayodiji Osibona, Head of Training and Development at Audacity Capital Limited. Thank you so much for taking us through those headlines. Appreciate your insights.